Aura is fascinating because usually in crypto, price and attention is highly correlated. The more people look at a particular asset, the higher the price tends to go. Now for Aura, we see a price rally, but the attention is rather low. Now what's really going on here? Let's have a look at the data most people aren't considering. Let's look behind the price action. Now have a look at this. This is the first time I publish a video on Aura on this channel. It's 42 days ago. At the time, nobody was interested in the token. The average video is here in gray, and that first Aura video is the blue line. Another video a few days later followed. Again, nobody had any interest in Aura. At the time, the price was at 7.5 cents. Now we are at 21 cents. I publish videos on various altcoins regularly on this channel, and I try to look at tokens that tend to still have some upside potential, so feel free to subscribe over here. The big question is, what's the potential upside, right? Aura is another meme coin. It's launched by the Pump.Fun ecosystem. It's on Solana. Can we see another 10x, another 100x? What's actually reasonable from here? Here's an overview of Pump.Fun ecosystem tokens. Number one is still Fartcoin with $1.5 billion in market cap. Aura has $210 million. So after an 8x, we would already flip Fartcoin. So a 10x is not that realistic, a 100x even less. But a doubling and tripling could be on the cards if the market makers and the centralized exchanges get involved as well. Because here's the thing, most of trading volume on Aura still happens on chain, on Solana. There was 3.6 million trading volume on Radium alone. And while we do have perpetual futures on some centralized exchanges, they aren't that significant in terms of trading volume. Just have a look at the open interest over time. Aura has only 200 to 250k worth of bets on the price. So the price is not going up because of leverage through the perpetual futures. The perpetual futures market still does not matter for Aura. Since that very first video 1.5 months ago, the asset has grown massively. It's now the 6th largest trending token on the Solana chain. It's got 8 million worth of liquidity on chain. And I believe that over time, this is likely going to go down because of accumulation by the market makers and by the centralized exchanges. We can already see how there's a tendency of the current momentum on-chain rather going down. Have a look at the number of first-time traders versus recurring traders over time for the last month. Both numbers are going down. Have a look at the trading volume over time. This is split up across different wallet cohorts, right? Very large wallets versus not so large wallets. And this tends to, again, rather go down recently. Here we've got the split, how much of trading volume is done by the different wallet cohorts. This tends to be somewhat constant, but large retail, especially recently, tends to take up a bit more of the trading volume. So small retail is all the wallets that have up to $1,000 worth of the token. For medium-sized retail, it's up to 10,000, and for large, it's up to 100,000 tokens. Just have a look at the number of retail investors versus whale investors over time. So to be counted for the chart on the left, a wallet has to hold at least 5,000 tokens. To be counted in the middle, it's 50,000 tokens. To be counted on the right, it's 500,000 tokens. So that equates roughly to $1,000, $10,000, $100,000. We can see how the number of whale wallets is close to an all-time high. We don't see that for the small retail investor. Now compare this to the Aura chart relative to Solana. That is at an all-time high. So it seems like the price of Aura is mirroring the holder chart of the whales more than the holder chart of small retail. And so that's always a central question, right? What's currently causing a price rally? Is this broad adoption by many people, or is this potentially accumulation by the whales and the centralized exchanges? And for Aura, it seems to be the second case. We see this even more clearly in the holding breakup. If we look at the wallets that have at least $100,000 worth of the token, or in other words, the whales, there's now 75% of the entire supply held by such wallets. Small retail holds now much less, relatively speaking, of the token. This is truly an accumulation by the whales, which likely will continue. But yeah, we have seen this massive rally in Aura, right? This 25,000% rally. But the upside from here isn't that large anymore. But if the centralized exchanges get involved more, if we get our perpetual futures trading as well, we might have our 2, 3, 4x from here. We're not going to see a 10x, but we're going to trade closer to Fartcoin. That's now where the potential delta is. It's more activity by the people with big pockets. The general problem with crypto as a whole is that there's more and more token emissions. So a lot of projects launch and the founders want to pay themselves. The early investors, the venture capitalists want to pay themselves. Maybe there was also some marketing expenses. So some YouTubers might get an allocation and then sell the token. And the retail investors have to support all of that selling for the prices to stay stable. This here is the weekly token emissions of the entire altcoin market that's tracked on this website, Tokenomics.ai. And it's pretty much above 600 or at least $500 million every single week. If the inflows into crypto are slower than that, then the altcoins have to go down, at least relatively speaking. For example, have a look at this here. This is the DeFi protocol 1inch. So it's a decentralized exchange aggregator. It got a lot of usage in the past. But the problem is that the circulating supply grew massively as well, right? From 100 million to now 1.4 billion. And that then leads to 1inch doing much worse than Bitcoin or Ethereum. This is 1inch relative to Ethereum. Or have a look at this. This is Optimism, right? A leading layer 2 scaling solution on top of Ethereum. It started out with 214 million tokens and it's now at 1.6 billion tokens. And that's the long-term chart relative to Ethereum. And so there are several consequences from this, right? We cannot afford to own a lot of different altcoins because the vast majority of altcoins underperforms Bitcoin and Ethereum most of the time because of that token inflation. But also picking a single winner here and there is very hard because, again, most tokens do worse. So it's like picking the needle in a haystack. Some people simply just stick with Bitcoin, Ethereum and Solana then and forget the rest of the altcoin market. But I actually think there's an opportunity here because if we have constant underperformance, we can bet on that. We can bet on the underperformance to continue and make money from that. So instead of getting this performance by buying 1inch, we flip this around. We bet on falling prices of 1inch and bet on rising prices of Ethereum at the same time. So this is the same chart, just flipped. And this is simply using decentralized finance to do exactly that setup. We are betting on Ethereum to outperform 1inch. Same here for Optimism, right? Instead of buying Optimism, we are just betting on falling prices of Optimism relative to Ethereum. So in the last year, that position performed 150% roughly. Now try to make 150% in a year just by plain simply buying an altcoin. It's much easier said than done. Yes, there are some outliers. There is this Aurasol and this DRGN and this SNSY token, but the vast majority of altcoins is just going down. And so instead of trying to find the next Aurasol, I think it's better to just flip this around and everything that's red becomes green and everything that's green becomes red. So then we've got the odds in our favor. We don't try to pick the needle in the haystack. Instead, we bet on the haystack, on the vast majority to do poorly. And again, there is a fundamental reason for that underperformance, right? It's all of those insiders selling all the time. The venture capitalists, the team, etc. Maybe even the users of the platform that get incentivized in tokens to use the platform. Have a look at the altcoin market cap relative to Bitcoin in the last 3.5 years. It underperformed by 75%. And if you flip that around, we've got an outperformance of almost 300%. So this is now Bitcoin divided by the altcoin market cap. I'm following the strategy already for quite a while. What we see over here is my portfolio performance in the last 4 years roughly relative to had I just dollar cost average into Bitcoin. So the Bitcoin dollar cost averaging is in gray and my portfolio line is that one in black. This is monthly data out of my personal Excel sheet. We're now at month 44. I did this mainly with borrowing in lending platforms like Aave and Venus Finance, but recently I changed to perpetual futures and this is even more productive. I started the test 2.5 months ago with 40K and that turned into 60K, again, just in 2.5 months. And so the premium members of this channel asked me, is there maybe a way we can just provide some capital to you and you do those relative valuation trades for us? And so I opened just that. It started 6 days ago, so there's no real sample size yet, but so far it has made 3.5%. I'm happy if we do 10% per month. I don't think we'll make 50% in 2.5 months again. But in general, we are moving in the right direction. And again, it makes a lot of sense, right? Most altcoins do worse than Bitcoin or Ethereum. We don't really have to be that scientific about it. If you want to learn how to become a winner in crypto and how to set up those relative valuation trades, where then the VCs and the insiders don't dump on you, but you're actually making money when they are dumping, then feel free to check out all of those tutorial videos, right? There's more than 100 tutorial videos in premium. I'm of course sharing my own trades as well, and then you can simply copy trade and take advantage of those trades as well. There are many opportunities out there, so feel free to check out the community as well. And so if you're an active trader, you can simply sign up for the monthly membership. It's $125 per month. You can watch all the tutorials, you can copy trade me as well. And once you're joining, I will also share my favorite trade. And if that favorite trade doesn't make you money in the first month, I will refund you 100% of that membership fee. So really, you don't really have a risk of joining here. You're either making your money back or it's for free for you. If you are not an active trader though, and you simply just want to allocate capital, you've got more capital than time, then you can sign up for the annual membership. Here you also get 2 months for free, so $250. And with the annual membership, you also get access to the automated copy trading feature, where you can simply just send money to Hyperliquid. So that's the platform that I'm using. And you get the exact same trading performance that I'm getting as well. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.